Today we got contractors fucking shit up in the income statement. Sorry, I just had to entertain myself. Excuse my French. But uh but yeah. Uh I don't even know where to begin in this mess. My name is Tommy. I'm from Tabular. Today we're going to be talking about this beautiful mess that is contractors and the income statement, specifically for QuickBooks Online, but probably useful for Zero as well if you have to. But let's begin. Contractors and the income statement. Today we will look at an example income statement, profit and loss, P&L. It's all the same thing, where there's too much information about contractors. We will discuss why this is not ideal. It's not a good thing. It needs to be fixed. We will explore a different approach. I mean, quite honestly, a better approach, the right approach. I'm just trying to be a little humble here. Why this different approach, the right way to do it, is important. So let's get into it. So here we have an income statement for a company called Sterling Cooper Draper Price. This is the name of a fictional ad agency from a TV drama series called Mad Men. I recommend that show if you haven't seen it already. We're looking at Exhibit A, income statement for the last month, version 1.0. We have the income at 25K, and we have various expenses. You can see in the middle section that's highlighted all these contractors' payments. So what this represents is all the monies we paid out to our contractors, each individual contractor. I didn't have time to come up with a name for each contractor, so I just said A, B, C, and so on forth. So we paid $500 last month for contractor A, 750 for B, and so on and so forth. Yeah, this is a little confusing. This is a lot confusing. So I will start off with I understand. I empathize. This is not only am I good with numbers, I am also good with emotions. I am a very well-rounded professional bookkeeper. I understand the bookkeeper, the accountant, the office person, and the business owner, how whoever it is that came up with this wild and crazy and chaotic income statement, I understand. I empathize how they came up because the sentiment behind this is the story behind this is everything else is somewhat of a consistent controlled expense. Payroll is just salaries and wages for in-house staff. So it's like that's not going to fluctuate wildly. Office expenses won't fluctuate wildly either. Supplies and materials probably could, depending on what kind of work they're in. The cost of goods sold could, fluctuate up and down, I guess. But the main thing here is the decision maker, i.e., the business owner, the business manager, the operator, they wanted the strongest, the firmest grasp on how much goddamn money it's going out to each and single individual contractor because that literally makes or breaks their business. Am I going to be in the black this month? Am I going to be in the red this month? Do I have to dip into the line of equity? How much money do I have in the savings account? How much money do I have in the operating account? How much money goes out to the contractors can really make or break the business. So I understand why they want to see the income statement like this, but we get into some problems. Why having individual contractors in the P&L isn't ideal. Number one, TMI. Sometimes I like to say TMI stands for Tommy Much Information. I'm very narcissistic sometimes. Not too many times. Too much information. P&L should be simple. It really should be simple. And there's emphasis on contractor spending. Just look at it. Just look at it. Just visually. It's taking up too much space on the report. And also, why not just go ham on details? Let's see the income Income by client. Who paid us? How many customers, clients do you have? Why not list all of them? Why not list the details of payrolls? How much do we pay John? How much do we pay Jane? How much do we pay in employer payroll taxes? How much do we pay in payroll servicing fees? So on and so forth. It just should be simple. Number two, why contractor payment details shouldn't be in the P&L. It creates room for error. Now, if you think about what ingredients, quote unquote, is necessary for an expense transaction in QuickBooks Online. Ideally, you need the dollar amount, of course. You need when you paid it. You need what GL account, what expense category it goes into. That's what a GL account is, the general ledger account, and uh, and who it went to, and maybe how it went out. Did it go as a check, wire, credit card? What was the payment method? So what this is doing here, this Exhibit A by contractor payment details is duplicating essentially both the vendor name who went on to it went on to contractor A, and it also went out within the GL account name contractor A. So if you imagine in the vendor list and the GL account list, general ledger account list in the chart of accounts, there's both this list that you have to maintain. Some poor bookkeeper, accountant, office admin, office assistant, or even the business owner themselves have to maintain this identical list in two different places, duplicated on the vendor and on the GL account. There's both a vendor contractor A and a GL account contractor A. And heaven forbid things get cross-wired. The payment for contractor A slips up into expense account contractor B and vice versa. Oh my goodness. This is not good. It creates more work, more confusion, and is completely unnecessary. So let's scrap this and imagine a clean and beautiful P&L. What would that look like? Ta-da! There it is. You just boom, consolidate all the contractor payments that went out. Just the total amount. Just the total amount in this Exhibit B version 2.0 for the income statement. And you also provide a supplementary a report. I missed that. One more time. And then you provide a supplementary report. This one is expenses by vendor summary. This is actually in QuickBooks Online as a standard report. So you can see all the contractor payments that went out. And also, of course, if uh, you can use the drop down and filter out and highlight which vendors you want to show because you don't have to show everyone. Because if you just do expenses by vendor summary, you're going to see all the vendors, all the monies that went out to vendors last month. So I think this is a better way. I think this is I'm going to show you why this is a better way. Why keep contractor details out of the P&L? Once again, P&L is meant to be a simple overview, a summary, if you will, of the business's financial performance. Remember, the P&L is really meant to be a simple tool, simple report. This overemphasis on contractor payments is not really an ideal thing. Separate reports can be run for contractor details in QBO. So, the example we saw, expenses summary by vendor or transaction list by vendor, these are both in standard reports within QuickBooks Online. And you can play around with them. You can play with like different criteria in terms of dates, in terms of GL accounts, in terms of vendors, so on and so forth. The last point I like to make here, I think is probably could be the most important, and I don't think it's talked about enough within the bookkeeping accounting world for small businesses is proper and patient education is sometimes necessary for the business owners and decision makers. Case in point, let's say this company is growing. Sometimes businesses outgrow their owners. Do you get that? Companies can outgrow the owners and the partners, meaning that maybe when it was a small, doing less than a million a year, Maybe that was manageable by the owner. But as a business grows, you need more business people running the business. You may outgrow your office assistant who's doing the books. Maybe you need an actual professional accountant slash bookkeeper to come in and deal with the books on a regular basis. Maybe you need then as company gets bigger, maybe you need a small accounting slash finance team, so on and so forth, to the point where you need a controller, you need an accounting manager, you need a CFO. So when a company gets a certain size, and but the owner and operator, the partners, the decision makers that are really running this business, they need growth as well. They need to learn as well. And yeah, this is not brought up enough. And this is one of the areas where it gets me going. It just irritates me to oh no end. But I'm also very passionate about it. I'm also very passionate about sharing knowledge and sharing best practices and learning it for myself. So yeah, I feel like having going back to the slide before, having these two tandem reports, one as a simple income statement, two as a supplementary report. You see, we can run detailed reports all the live long day. We can have contractor payment details last month. We can have income by client. We can have a payroll detail. We can have every GL account here can be made into details. Of course, it shouldn't be just one. I mean, you can have a profit and loss by detail, of course, and show every little dollar and cents, every little line item that makes up this simple income statement. But sometimes you need to see separate things separately by context. And that's really the key, by context. So I hope you enjoyed this little presentation. My name is Tommy Kim. I am based here in Midtown Manhattan. Thank you for watching.